Well, I've chased him around the world. Now I'm chasing him into the country of Spain. And Larry Goldberg is nothing if not a world traveler. He's lived throughout the world, and now he's going back and revisiting some spots, some parts of the world he's been to before. But Larry, how is Spain these days? Is it looking as good as ever, or how?
Yeah, to say that it seems that the standard of living here is really, it was always sort of the considered southern part of Europe, not as, the quality of life is not quite as good as maybe in the northern part of Europe. And I think that remains true, but I think the standard of living is pretty good here. I think the quality of life is pretty good, more so than the standard of living. People are very relaxed. Of course, they're hot-blooded. They're Spanish. They can get quite excited, but really lovely people. We've enjoyed every minute here and find, it's very easy. People are extremely easy to get along with, extremely easy, and they're very patient with you, even though they may not be impatient with one another, as we hear from time to time. But yeah, it's a beautiful part of the world. Right now, we're in the Marbella area, which is heavily, heavily overbuilt. I mean, grossly overbuilt. And, it's little Britain here because so many people come from Britain to settle here
Okay, yeah.
in Spain. So this is not quite Spain, if you like. But yesterday we were in Grenada, beautiful little town, very frightening town to drive in, I will tell you. I have never driven in such a narrow road in my entire life. And when I say narrow road, I don't mean the road is narrow. I mean the walls are as narrow as the road.
Yeah.
I had to, close my mirrors. I had to fold my mirrors. And even then, I had less than an inch on either side of each mirror.
Oh my gosh.
And the road is narrower because those are the walls coming down.
Yeah.
And then the sidewalk, sticks out a little bit. So to avoid scraping my tires, scraping my wheels, I mean, it was nightmarish, nightmarish. Teaches you to drive though.
Yeah, I guess so.
Which at my age is not is not an easy thing to learn. Anyway,
Well,
pretty,
if you'd had full self-driving, it might have helped, right? I don't know.
it really would have helped. Man, it would have helped. Oh, I tell you, anyway, it's very frustrating driving on the freeways, and you've got auto steer, and you've got what they call full self-driving, which is lane keeping.
Uh-huh.
It won't change lanes, it's just lane keeping.
Sure.
But it is what it is. You get by with it. But I want to talk about the charging network in Spain.
Yeah,
because
I'd be excited to hear about that.
I was under the impression that Europe is much further along in terms of charging networks in general, not just the Tesla charging network, but general charging networks. And what I'm learning is Spain is as bad as anywhere else.
Wow.
Bad as France, as bad as anywhere else. France is bad. And what's bad about it is this. There are umpteen different vendors with umpteen different charge units. And every one of them is just terrible user interface, if they have an interface at all. So every charger you want to use, they want to make you download a new app. And then when you download an app, I mean, get this. I'm in a parking lot, an underground garage, huge underground garage in Grenada. Take a few minutes. Just patient, bear with me. It's an interesting story. I see, the charging station's there. This is good because I'm in Grenada. I've only got 80 kilometers left in my range, and there's a charging station, a Tesla charging station, 50 kilometers down the road. It's kind of tight. I would normally make it. But in this underground parking lot, there are 2 parking spaces with chargers in them. Think to myself, that would make it very comfortable. I leave it charging overnight, drive away. I can skip charging right out of the gate and, go down the roadways. 40 minutes later, after struggling with this charger, I gave up entirely. Why? Because they wanted me to download an app. All right, that's not the end of the world. It's a bit inconvenient, but it's not the end of the world. I'll download the app. I download the app. Then, in order to identify where you are, it wants to connect to, wants your phone to connect to the location.
Right.
Well, it's a little tricky underground.
Yes.
It's not going to connect to any location underground. And why can't you just select the,
number or something? Yes.
So I walk upstairs 2 flights to get it connected because there's no other way, it turns out. Walk down there. Then it says, and it identifies the station. Okay, it's got the station. Now it says, plug it in. Plug it in. Nothing.
No charge.
No charge. Go through that, add this, that, the other. It offers me a solution. Phone. This is the phone number if you have a problem. Well, at this point, it's, And this has been a consistent experience throughout Spain and throughout France. Nothing works.
Wow. Wow.
We had a very similar experience in France. We were in, I guess it was Marseille. Parking garage, charger, very convenient. We'll be here for an afternoon, a day. Be great to go away with a full charge, plug it in. Oh, it turns out there's a limit of 2 hours.
I see.
And guess what the charging capacity is? 12 kilowatt hours. So in other words, you can get like 4 miles of additional range, and it didn't work.
And it didn't work.
Which is fortunate, because who would have wanted,
But it spent 2 hours to get 4 miles.
It's like you can't get there from here. And so if anybody tells you that in Europe anything's any better, no. I mean, I've stopped on the road on these, huge networks, plugged in, failed. The one network that does work is the Total network. And the only problem is they double charged me on my credit card, and then that was also a problem. I haven't resolved the problem yet. I will resolve it with my bank, but no charging experience has gone, except for, of course,
Tesla. Of course, yes.
You arrive at the Tesla station, you plug it in, you're done.
Done, yes.
I mean, it's just done. And the rapid charging, there are plenty of level 4 stations, there are plenty of level 3 stations, quite a few level 2 stations, and there's some smaller stations. But there's always a station available, and it's always, I will say that outside of Grenada was a little bit outside, 50 kilometers outside Grenada, which is a pity. It would be more convenient to have filled up, in Grenada. But other than the minor stuff, the Tesla network is still the solution, and it's the only solution.
All right.
And by the way, at every supercharger, about 20% of the vehicles there are non-Teslas.
Oh, okay. Interesting.
Yeah.
Interesting.
Anyway.
All right. So, but in the meantime, Elon has fired the entire supercharger division, and the world is going crazy. Tesla's not a big deal until they take away some of the candy. but apparently all of the other folks that are hoping to depend on Tesla superchargers in the future are quite upset. And even the Tesla community is upset that what's going to happen? Even after Elon comes out and says, we're going to spend $500 million on new installations this year, the uproar continues. So what did you, I've already made my case clear. I think He did a house cleaning. You need to do house cleanings from time to time. Bureaucracies become overwhelming, and apparently this one became really bad. And so he cleaned up like he did it at Twitter. Or what?
I don't think the bureaucracy was really bad. I don't think it was as bad as people make out to be. I think the issue was simply that people really built this notion about, the management built this notion about their fidelity to their employees and vice versa. It was a very strongly knit team. And Elon felt this was dangerous. For the benefit of the firm as a whole. This wasn't the spirit he wanted. He wanted the entrepreneurial spirit, even in an organization such as the charging network. And he cleaned house. I mean, this is not unusual for, you have to read, if you read Ashley Vance's book, now, I don't know if you deal with this in your book, but in Ashley Vance's book, he fired his long-time, secretary or, person who ran his office.
Yes.
And he fired her because she wanted a raise. And he said, look, why don't you take a month off? Let me see how I get on without you to see if I need you. Because he has this sense of every penny counts.
Yes.
And that sense overrides, everything else.
Yeah. Yeah.
So I think that, what he decided is that, there was a lot of resistance to where he wanted to take the firm, to the robotaxi, to the AI, to the automated, a lot of resistance. A lot of people felt that it was too early. A lot of people felt, that they really needed the Model 2 or whatever the next gen was. A lot of people were pushing back on a lot of the things that he wanted. And he decided that the simplest solution was to clean house. And he did. And it's a pity because a lot of those people were really outstanding. I mean, top level people, and they'll go on to do great things. They will. Every one of those guys will go on to do great things. He'll just change the strategy and he'll find people who want to actually pursue that strategy. And I bet you'll rehire 20%, 30% of those people.
Yeah, very, very, very likely. So that's exactly where I wanted to go next with this conversation. So we have okay, Elon said it, I don't know, almost a year ago now. I think maybe it's 8 months ago, 9 months ago. This is now an AI company specializing in robotics. When he said that,
Right.
because my channel is devoted to whatever Elon says, I believe it. I mean, it doesn't mean that that's what's going to happen because things change. So you can't always say, okay, 10 years from now, we're going to have the same solution that we have now because things change.
Or 3 years, or 3 years time,
or a month ago.
Yeah.
So, but when he says it and he says, look, as far as I'm concerned, this is now an AI company with a specialization in 4-wheel and 2-legged robotics, then I say, okay, that's what the company is now. Well, street takes a lot longer to get that, even the retail investors and
not just the street, not just the retail investors, but the employees as well.
And the employees as well.
And that was the point I was driving at.
Exactly.
Some of the employees are not signed on to that view. Yeah.
Right.
Sorry.
Okay, so now we have a big deal this last week. People pointed out that in the new annual report on how Tesla is a sustainable company, in that new report, the 20 million vehicles by 2030 was no longer in the report. Now, there wasn't a new number given for 2030, and there wasn't any commentary around that, and Elon hasn't said anything about it. But a lot of people are grabbing onto that saying, oh, okay, maybe Elon is expecting now that the vast majority of the cars built in 2030 will be no wheel, no pedal vehicles. How did you take that report? Or the fact that that number is no longer in there?
Randy, I don't read tea leaves. I don't place this kind of level of importance in these kind of quotes and sentences. I really don't. if Elon tells me he's not going to build 10 million cars or 20 million cars, whatever it is, then I'll believe it. But if you take one report to the next, I don't read these tea leaves, so I'm not gonna surmise on what it may or may not mean. I think that when you are going to become a robotics company, when you're going to become an autonomous company, I think a lot of things change in terms of how you value the company or where the value lies. And the value in an autonomous company, in an autonomous company, turns into miles driven or miles paid for, really, miles paid for. And so the question of how many cars that is really, it's not the right number. It's not the right metric. It could be 40 million cars, it could be 5 million cars, it could be 40 million cars that are non-Tesla cars.
Right.
But we got to wait for 8.8 to see what's in Elon's mind, because he's not shared it with us yet. And he is definitely, everybody knows better than Elon. Everybody. By the way, whoever posts on X, they automatically are more intelligent, brighter, than Elon. And will tell you exactly the things that Elon has got wrong.
Right.
So I'm not going to put myself in that position. I'm going to wait until Elon tells me what the strategy is before I second guess his strategy.
So along those lines, I thought the most important news of the week, which was way underreported in my opinion, was that Jensen Huang said that Tesla is far ahead on automated driving.
It wasn't way underreported. It wasn't way. I tweeted it.
I know. I talked about it on my channel, and Yahoo wrote one article about it, but I don't think anybody else did. So it was vastly underreported.
Yes.
I thought it was the most important statement of the week, because who would know better than the CEO of NVIDIA as to who's ahead in autonomous driving? And he says ahead. And then that would also mean, of course, that they're ahead on the two-legged robot as well. The implication would be,
I don't know if that follows. It may do. It certainly they're not behind, but right. I don't know if it follows. But I will say this, that Jensen wasn't telling me anything I didn't already know. What is important about him saying that is, for all the naysayers, I had people attacking me because, you don't understand, and LiDAR is better now, and you don't understand engineering, and it's clear now that he made a mistake. It should have been LiDAR, all that kind of stuff. When Jensen said it, maybe these people will just, chill a little bit and just let this thing play out. But there's no doubt in my mind that Jensen is right. That was what I believed before Jensen said it. I believed it after Jensen said it. And, I think that we're in a very good place. I'm very excited about 8.8, very excited about 8.8. The next 2 or 3 releases of 12.4, 5, and 6 are going to, or 4, 5, and maybe 13 are going to be very, very important, because we've begun to see the pattern. We've begun to see the curve rising to the exponential point after being stuttering for a while. And so the continuation on that exponential is going to be key to where we are in terms of full self-driving.
Right, right. And so if we get the kind of improvements that Elon's talking about, a 5 to 10 times improvement in the number of interruptions in the drive, just on the next 12.4,
yeah.
12.4, that would be obviously a very significant improvement. And then if 5 is better and 6 is better, plus adding on these additional things that are not yet in place. All right, so people, they seem, on my channel at least, they seem to be very, very interested. And I know you're not a short-term player, but I also know you're a savvy stock market player. And sometimes you do play the short term, including even getting into the options and into leaps. So what is your take? How are you going to play, or are you going to play, or if you cared to, how would you play the upcoming board meet? I mean, the upcoming, board meeting with a vote. How would you play 8-8?
Well, I believe the vote is going to pass. We can talk about that, but I believe it's going to pass. I think that if it doesn't pass, we're in a world of hurt. If it doesn't pass, I think the stock could drop 25%. It could drop 40%, but in that, it could drop by a very considerable amount. I believe it will pass. I believe when it does pass, there'll be a modest rise, if not a spike for a while before it drops back a bit. I think, the reason it would spike would largely because there's going to be some short action. There's going to be some people who are going to take some short action. So I think one could play them. It could be dangerous because there could, be a surprise failure of the boat. I don't think the boat is going to fail. I think it's going to be fine. If the vote passes, I think we will see, solidifying of the share price. Just remember that we're very close to the end of June. And there's an expectation that the second quarter numbers are going to be awful, that they're going to disappoint significantly.
Mm-hmm.
And if they do, there will definitely be, a reaction. And, we'll see the numbers over, early in the June month, and then we'll see the dollars, we'll see the actual earnings. I think it's going to be a negative cash flow quarter, a significant negative cash flow quarter. I think we will see the share price struggle, even if the board approval comes on June 13th, is it? 15th, 13th?
June 13th.
And then I think we'll see, the nervousness of the market towards the production and delivery report drop after the production and delivery report, because it's going to disappoint. And I think the earnings are going to, I think it's going to be a mixed bag, because I think energy will do well, but the top line, the headline top line is going to be significant disappointment, top, bottom line, and cash. I think all three are going to disappoint, and I think we'll see, significant decline in the share price between end of June and August the 8th.
Okay. And
now traditionally, let me just wrap this up. Traditionally, after these big, days, autonomy day, or whatever day, there's a drop in the price, because the company tends to talk over the heads of the analysts.
Right.
I think it's going to be different this time. I think this time is different. I think we're going to see a significant improvement in the price. All of this with a background of 12.4, 12.5, or the realization of the experience in the performance of FSD. So that's how I see the year playing out.
All right, so I agree with most of that. I'm wondering why you think that free cash flow will be negative. They've dropped the total amount of employees by a significant amount, so there's going to be a pickup there. There's probably going to be less inventory, so that's going to give free cash flow a bump. I don't think the sales will be so bad, or the margins will be so bad, that we would have a lower profit per car, or that kind of thing. So where do you see, is it because of the expense that's going to be going into CapEx, into AI?
That's not expense. That's not expense. That's
Yeah,
capex.
I'm sorry.
Yeah.
The-
Yeah. So capex is going to peak.
I see.
I think capex is peaking in the process of peaking. I think it'll peak by year end, but yeah, I think it's going up very significantly. That's what I think.
Okay.
And of course, we'll actually, I don't even know whether we'll show a profit overall, but our profit is going to decline significantly. So that's going to reduce our cash flow
Right.
from revenue, from profits, and then we're going to have quite a significant bump in capital expenditure.
Okay. All right. Okay. So the 8.8, we have at least one report yesterday suggesting 3 vehicles will be shown on that date. Most people in the community that I've talked to think that we'll only see the specific robotaxi as far as a hardware item on that date. We will not see the Gen 2.5 car, or whatever you want to call it, the modified Gen 3 car, because that, I think you've even said it in the past, they're going to want to release that actual vehicle days before production starts. What is have you changed your thinking at all, or what do you think on in terms of
No,
the
I thought they
product?
would show that car. I thought they would show that car.
Or you think they will show the new car? Okay.
Yeah, I think they will. I think they'll. I mean, we're not far off from that car being produced. Um, you know, I argued with Herbert that they would show the car. He thought they wouldn't. Now I'm kind of backing off that a little bit because of the changes that Elon has made. I think Elon has in cleaning house, as it were, he's reoriented the company much closer to his original thinking. So he could well not want to show that car at all. Look, the key on what we're going to see on 8.8 is the app and hopefully the business model or the outline of what's coming
Right.
in robotaxi. So maybe hardware is less important and maybe he wants to focus on that. I know that they've already teased the app,
Yeah.
and it could well be that that's going to be the focus. But yeah, I think he's rethinking or has rethought 8.8 as a result of the changes in management. But time will tell.
Yeah, I mean, there's certainly a refocus in terms of how things are being done. You've got again this huge amount of money of CapEx going into AI. You've also got the 0 jobs being posted until this last week, and the only jobs going up were on AI and robotics. So that, if you want to read tea leaves, that would certainly be a couple of tea leaves that I think are worth paying attention to.
Right, I think so. I think that's right. So whatever 8.8 plans were, I think they've evolved. And so I think we need to see a little bit more 12.4 to really think about, what he's going to show on 8.8. So it's possible that he hasn't even made up his mind, and it's interesting to me, who is gathering around him to think this thing through or to action it. One thing's for sure, he's giving it a lot of thought. I mean, I think he's very focused on it.
All right, I want to change now to the economy in general. I know this is a subject that you and I spend a lot of time on together.
We do.
And it's really one of the most enjoyable things that I do every month. So, Kathy Wood will be out next Saturday, but this Saturday we had, and I'm sorry, that's not true. It's 2 weeks before
2 weeks,
they
yeah.
get the employment numbers because of the landing of the 31st on Friday next week. But anyway, we did have in between quite a lot of conversation going on, not just in the X community or just in the kind of the non-CNBC world, if you will, but even the CNBC folks have been spending a lot of time on this. And that is this disconnect between how the folks are looking at the economy and how the numbers are going on in the economy. And okay. So let me share my screen and show the University of Michigan Consumer Sentiment Index, Larry. So
Wow.
looky here. Now this doesn't show us all the way through 2024. Unfortunately, it's only through 2022, but we can use my pointer here to show where we actually are now. We're back up around here, around 75. So consumer sentiment dropped really, really low, I'm assuming because of inflation. It's popped back up, but you can see that compared to prior periods, it's still very low. So the consumer is very, very unhappy. Now we can compare and contrast that to the, whoops, that is the wrong one. Let me go here. We can compare and contrast that to the conference board. And this shows on the top line, the present situation index. So people are feeling better than they did 2 years ago.
No, that was the bottom of the pandemic.
Bottom of the major part of the COVID. And so they're feeling better than then, but it's been flatlined pretty much since then. And then what we see down here is their projection of how they're going to be doing later, their expectations index, which you can see is dropping like a rock recently, just in the last year. So the question becomes, why is there this disconnect, Larry? And before we take a look at what the all-in guys had to say, I'd like to get your thoughts prior to that.
Randy, this disconnect is extraordinary, and I'll tell you why it's just doubly extraordinary. If you look at the expectation right now, the expectations where it was in 2009,
yeah,
after the global financial crisis. I mean, the only time it's been much lower than that is 2012 and 2013, since the global financial crisis. That's extraordinary. I mean, it's lower now than it was at the bottom of the pandemic.
Yeah, much lower. Not just lower, much lower than it was.
Much lower. It's extraordinary. It is truly extraordinary. That's strange. That is strange. Of course, it's, yeah, wow.
All right, well, let's go ahead. Let's take a look at what these guys had to say. I picked the wrong one again here. Here we go. Let me just play a bit of it. Let's open this up the full screen here. All right, here we go.
More than half of Americans think we're in a recession. I think we're in a vibe session right now because we're not in a recession. But people are feeling really bad. A Harris poll conducted by The Guardian shows that 56% of Americans wrongly believe the U.S. is in a recession. Not surprisingly, they blame Biden. The poll highlighted a bunch of misconceptions. 55% believe the U.S. economy is shrinking. It's obviously not. 56% think the U.S. is experiencing a recession. It's obviously not. 49% of people believe the S&P 500 stock market index is down for the year. It's up 12% this year. It was up 24% in 2023. And 49% believe that unemployment is at a 50-year high when it's in fact at a 50-year low. And Americans are really concerned about the cost of living and inflation. Fair enough. 70% said the biggest economic concern was the cost of living. 68% said that inflation was the biggest economic concern. Important quote here, a majority of respondents agreed it's difficult to be happy about positive economic news when I feel financially squeezed each month, and that the economy was worse than the media made it out to be. According to the poll, 70% of Republicans and 40% of Democrats think Biden is making the economy worse.
So out of all of that content, which I thought was remarkable, there were two things that came to my mind. Number one is how far the public is off on the numbers. But number two was that 39% of Democrats thought that Biden is bad for the economy. That's a very high number. and should be troubling for the Democrats as they position themselves for the fall. What did you take away?
Yeah, I think the political situation is not strong for the current president. I think he's facing some very difficult situations. You know, one of the things that I mean, one of the assertions that were made is that we're not in a recession.
Yes.
You know, you and I have had this conversation every time we've looked at the economy, and you know, I'm in the Cathy Wood camp. I think we have a so-called rolling recession. I think we have a recession, and we can pick the pieces of the economy that's in trouble and that are in recession.
Right.
We talked about housing. We talked about you know but the issue is not the sectors that are in recession. The issue is the individual. And in the same podcast, I mean, Chamath drilled down to, I think, very exactly that the individual, that the public feel that their standard of living has declined. Because
yes.
even though their income is fairly solid because they're employed, their cost of living has risen so dramatically that they're feeling that they're not living as well as they were before. And if you look at the GDP, it seems that the GDP is expanding, but most of it is expanding on increasing debt, increasing debt indebtedness. And that indebtedness is coming at higher and higher interest rates. So we may not be in a classic recession measured by the GDP growth, or you know, less inflation, but the consumer, the public, are in a recession. Mm-hmm. And they're feeling in a recession. Even though they're employed, they haven't been fired, they haven't lost their job, they're still employed. But what they're bringing home is not covering the cost of living as well as it was. Now, right. They haven't exactly declared bankruptcy, they're still feeding their children, but the standard of living and the quality of their life has declined. And to them, that's the same as being in a recession.
Right. So, all right, let's take a listen to Chamath as he describes what he's seeing.
Chamath, you have some thoughts on this?
I'm going to go out on a limb and speculate that a lot of the big numbers that we use to gauge how we should feel about things in today's day and age are pretty brittle.
Okay. Explain.
And fragile, and may actually just be totally wrong. So what's an example? So for example, like if you look at something like non-farm payrolls, right? So the first Friday of every month, you get this report that comes out from the Department of Labor, and it shows where unemployment is. But how do they calculate that? Do you think that they have a real-time sense of exactly every person in that month that entered the workforce or exited the workforce? No. They do a survey and then they extrapolate. And if you do that survey incorrectly, and Jason, you've commented on this before, for example, if you don't capture adequately the number of people that are on the sidelines and never join the workforce, or the number of people that are part of the gig economy, so they are kind of working, you get an inaccurate sense of where the real economy is. I think that GDP is somewhat similar, because if you just break down what GDP is, so Nick, there's a very simple pie chart I sent you. What is GDP? It's the sum of four things. Most of it is what people spend.
Okay.
Then the next big chunk is what companies and governments spend. And then the last is what we export to other countries. So let's just pause for 1 second and think about, what do you think happens when rates are 0 versus when rates are at 6%?
People spend a lot more.
Well, people tend to save when interest rates are high. Just the natural thing, like, why would I buy a pair of these Nike shoes? I'll just put it in the bank, I get 6%. But when the bank pays you zero, you're like, let me buy these Air Force Ones and move on, right?
All right, let's stop there for just a second. Let's take a look at the first two pieces of this. So, Larry, you've been concerned about the non-farm payroll analysis that the government does for a very long time, and
Yes.
I've been very concerned about it for some of the same reasons. But one very big reason we agree on is that they keep reducing, with the exception of 1 month, they keep reducing the prior month's numbers over and over and over again. Kathy Wood went back and looked at the stats, and she said, every time that you see that reduction month after month after month, it's a recessionary signal having to do with how fast the states report it. It wasn't anything to do with bad reporting or people trying to kid people. It's just that the states report slower when the number is dropping or going up, I guess is what would be the case. So anyway, what
But you know,
yeah, go ahead.
sorry. I had another reason that I've been very suspicious of this number all along. Look, the population of the United States is reaching an all-time record, has been consistently, because our population continues to grow. Of course, right now it's growing with, illegal immigration, to give it the correct label. But the number of people working has been flat or declining for like 20 years, 15 years, almost 20 years, 18 years. And it declined very dramatically, with the pandemic, and hasn't recovered. So how can we be at full employment when our population is growing to, its highest level ever, but our total people working continues to decline?
Yeah.
Something doesn't add up.
Yeah, and this is a big thing. It's really only starting now, Larry. You've been talking about it for a year. I'm just beginning to see it pop into some of the headlines in the financial reporting. People wondering, where are these workers? Yeah. I mean, there's a certain percentage of people that are turning 65 or 70 and dropping out of the workforce. That would be the natural thing. There's some people that are dropping out early in their 50s. But for the most part, that's expected. You can plot it, you can plan it. But now we've got a huge number of single men coming, as you point out, illegal immigrants coming into the workforce. Are they working? Are they not working? What's happening with them? What's happening with our young men that are born in this country that are between the ages of, let's say, 18 and 30? Are they truly living in their mother's basements? So there is some kind of an issue here going on with regard to some missing folks that are not employed at this point in the workforce. It's not being picked up by these stats.
Yeah, and you would have thought that in the last 50 years, the number of women who participate in the economy have increased significantly. And so it doesn't make sense to me that such a large proportion of our workforce should not be participating. It could be the aging population, it could be, a lot of factors, but I just feel very uncomfortable looking at I haven't been able to square the numbers yet. Just haven't been able to.
So then we have this chart, which I thought was extremely interesting in terms of what people, what is the GDP made up of? Of course, I think you probably knew this as I did. But what we know for a fact is that consumption is 70% of the market. That's anybody that pays any attention to economic stuff knows that it's 70% of the total pie. Government spending, though, and that is consistent. It's been for years and years and years around 70%. Government spending and investment expenditure, those two represent almost all of the rest. So you have government spending last year, this time, was going up radically because of those infrastructure bills and the IRA, et cetera. The Inflation Reduction Act. Those things were impacting the economy last fall. I think Taylor Swift was also hitting the economy about this time last year. We're not going to have those again this year. So this becomes the big question as to how the economy can continue to show even a GDP increase in the third and fourth quarter, given that those numbers are not going to be there.
Well, the great hope is productivity rises.
Right.
And even though you have less people working, you will have, significant increase in GDP in actual goods and services produced, and consumption expenditure will take up the slack. Certainly, there'll be investment expenditure. We've spent huge amounts of money on NVIDIA chips. I mean,
Right.
ungodly amounts of money. I mean, although it doesn't move the needle that much in terms of these numbers, but it's a lot of investment in AI, both in hardware and in software, and that could well pay huge dividends and generate a lot more, investment as well as consumption.
Well,
but absent that, sorry.
Yeah, go ahead.
Now, absent that, I'm as puzzled as you are. I think we're in a recession. I think we've been in a recession for some time, and I think, we defined away the recession that we were in 22. We just defined it away, and for no good reason. And now we're, I think, in a different world. I've said again and again on your channel, every recession is different. Like every unhappy family is unhappy in a different way. Every recession is different. And we're only going to discover the nature of this recession after the fact.
Well, and I think to your earlier point too, it's not a question of just the technical number. And I think this is what Chamath is going to say in a minute, in a different way that I'm going to say it. But what we know for a fact is our trucking has been in a 14-month, 15-month recession. Housing has been in a 2-year recession. All the things related to housing are in recession. So you've got the retail side of that, the Home Depots, the Lowe's, et cetera, in recession. You've got a little bump actually this month on durables, which was surprising. I'm not sure that's going to hold up because I'm not seeing it anywhere else. It was just one report. But you've got durables down for, manufacturing has been a recession for 2 years. So those are pretty big parts of the economy, Larry. And tech can't do it all. It can't be 100% tech.
Well, they can't do it all, but they can supply a huge increase. I mean, the 1980s were proof of that. And, again, in the post-2008 recession is proof of that. I mean, tech can have a huge impact and can be a multiplier in terms of productivity, which then, will generate huge amounts of return. So that is the hope. I mean, Kathy's spoken about this often, so that is really what the focus is in terms of, the innovation story.
Well, let's go back to Chamath.
It turns out it's the same for companies. Companies find it easier to invest when rates are at 0 because it's cheaper. It's much more expensive because they're borrowing money at 6% versus at 0%.
Or more. Corporate gets charged a higher fee, right? Yeah.
Then when you have high interest rates, you have a currency that appreciates. It makes exports less attractive to other people, which means then you become a net importer. Okay, so what is the last thing that's left? The last thing that's left is government spending. And you have to ask the question, what should governments do when rates are high? There was a chart I published in my annual letter, if you just go to that for a second.
And just going back to this chart right before it, just so the people who are listening, if you put the pie chart in there, important for people to know, consumer is about 70% of the economy. And if you put investment in government together, that's just over 34, 35%, something like that. Yeah, exactly. 35%. So it is a consumer-driven economy, but hey, corporate and government spending is a major piece as well.
And I just wanted to highlight that when interest rates are very high, all of a sudden, governments are faced with this very difficult problem, which is, oh man, I have to spend a ton of money on interest. Just like if you had a bunch of credit cards and all of a sudden the interest rates went up. So the choice is twofold. Do governments spend less? But unfortunately, it turns out that our governments in America, they just keep spending more and more. So even if net interest income is small, even if net interest income is high, they're just like, forget it, the taps are on. So what does this all mean? I think what it really means is that we do a very poor job of measuring all these dynamics together. And so I actually trust the survey data of these individuals more than I trust the GDP report, in the sense that I think it more accurately captures this dynamic. Rates are at 6%. People are saving more. If they're not getting paid more, things are costing more. The government is giving you free money, so you kind of feel like everything is moving. So that the GDP measurement, the way that it's classically done, shows that, wow, we grew at 3 or 4%. But the average individual American isn't feeling that. They're actually
they're not
feeling
part
that
of
they
it.
have less money. So I would actually go with them and actually say, if we don't revisit this thing from first principles, we're going to get this dynamic where we think one thing is happening, but the actual exact opposite is happening. In this case, I do think we're in a quasi-synthetic recession.
Sachs, what's your take on the vibe session?
Well, look, I tend to agree with Chamath on this. I think this is a classic story of who do you believe? Do you believe the experts or do you believe in the intuitions of the American people? And the experts have some statistics on their side, but you know, the old saying goes, there's lies, damn lies, and statistics. And then the American people have their actual lived experience on their side.
For some reason, my button didn't stop the show. It didn't stop their show. So
So it was interesting to hear, David. It was interesting to hear what David said.
yes, well, I have to edit out my my little mistake there. But in any case, now going back to okay. So Chamath thinks we're in a quasi-synthetic. I'm not sure he could define that if he was asked to, but he thinks we're in a quasi-synthetic recession. He thinks that the consumer is right. And that if we don't measure these things more correctly, we could really get ourselves into trouble. And you say?
Look, you know, Chamath is right. He's saying the same thing I'm saying. He's saying that these measurements, while they point to higher employment, that how we're measuring employment may be completely wrong. I mean, that's another way of squaring this circle. You know, if my intuition about the employment figures are right and they are wrong, then that makes Chamath's point totally accurate. And he doesn't have to use the word synthetic. I mean, what he's saying is that he doesn't believe the numbers. He thinks the consumer is right. He thinks that the broad opinion, and this is what David is saying, the broad opinion of the market is that we're in a recession and the government is wrong. Now, it could be, you know, that we are seeing a shift in the classic allocation of expenditure. I don't know. It's very troubling. It's very troubling.
Larry, I put out an idea last week. I'd love to have you comment on it. I think we're going to end our the portion of the show where we're looking at the all in podcast because we're running up against an hour here. We're probably going to want to put a cap on it. But Larry, I have this theory that I started playing with last week that we're getting into two very separate economies right now. And the two separate economies I'm talking about are the bottom 50% of earners and the top 50% of earners, which would also include the well-to-do retired.
Yeah.
Those well-to-do, I just saw a bunch of stats this morning also that were talking about those folks that are in that lower income group. They're cutting back on travel. They're cutting back on entertainment outside the home. They're cutting back on trips to McDonald's and also any other kind of eating out. They're cutting back on driving. They're cutting back on driving. These are things that they're cutting back on. The top things they're cutting back on right now. The well-to-do are spending like crazy on travel. Every single airline representative that was interviewed this week on CNBC says they're sold out for the summer. They're not having any trouble getting seats and, you know, butts and seats or how you know, it is going to be a great year for travel because there's this other cadre the folks that are in tech and the folks that are making plenty of money, or the folks that are retired and have those nice pensions and Social Security. Huge, what if it's 17% of Americans are millionaires? I think, and I don't want to be sounding like a far lefty right now in talking about this, but I feel like there's a big split in terms of the experience of that bottom 50% compared to normal, compared to where we were, let's say, 10 years ago.
I think you're right. I think you're right. I mean, I'm not going to lay blame. I'm not going to point a finger because I think, there are probably 20 different theories as to why this is. But obviously there's a lot of dissatisfaction across the country. There's part of the, I think, reason for the excitement around Donald Trump and the lack of excitement around Joe Biden. But, I think this is exacerbated by this tremendous inflation we're experiencing.
Yes.
Or we experienced and we're trying to clamp down on now. And of course, who does it hurt when we clamp down on? It hurts that bottom, rung. And when you see the level of inflation, say for fast food, which the All-In featured, it's gigantic. I mean, it's not like 10%, it's not like 20%, it's like 40 and 50%.
Some things have doubled.
Some things have more than doubled. Yeah. I mean, the level of inflation of fast food is staggering. And that became a default method of feeding the family for some years, in some segments of the economy. So, yeah, I mean, those people are incredibly vulnerable. And while a lot of people are retiring on, on a fairly good basis, there are a lot of people who are not in a very good position. So I think what you're saying is correct. And I think what you're pointing to is a split, a bigger split than we've ever seen before. And I think a lot of this has to do, with this recession that was imposed on us by there's plenty of blame to go around to all political parties about how the pandemic was handled, both from a medical, but also from a political, and more particularly from a financial economic point of view. I think it was terribly handled by both parties and by, all the cognoscenti, all the people who are supposed to have known. And I think that's, just a reality. So, yeah, I think we're in a recession. Yep, I think the recession is, hurting the most vulnerable in the country. And yeah, I think by and large, the government is ignoring it.
And let me also put another caveat, a little nuance on this split that I'm talking about between those in the top 50% and those in the bottom 50%. The bottom 50% are actually doing better than any time in history by a lot. So the bottom 50% in the 50s or the 60s, a lot of those people were in abject poverty, not sure where they're going to get their next meal, not sure they could pay their rent. That's not the 50% I'm talking about that are suffering right now. The 50% I'm talking about right now are the ones that are not going to buy another pair of Nikes in the next 90 days. They're not going to take another trip on a cruise this year because cruises are affordable now for that bottom 50% normally. So we're talking about a very different split, but that 50% split now is becoming more sophisticated, more knowledgeable. They're reading, they're more up on what's happening in the world, and they are more likely to respond to this shortfall in their position.
I would take a more complicated view of that.
Okay.
I think if you talk about the bottom, I think it's very difficult to talk about the bottom 50 because I think the bottom of that bottom 50%, the 20% at the bottom are really in trouble, serious trouble. I think between the 50 and the 20, maybe what you say, I mean, what you say is absolutely true. But the people at the bottom are really in serious trouble. And I think that a lot of it has to do not with financials and not with economics. I think it has to do with family. I think the breakup of the family, the lack of family in that bottom segment, I think is, and lack of education and poor education. I think it's fatal for them. And I think that it has an enormous impact on our nation, and I think that it's going to take a lot of healing. And that piece of it, whether it's the bottom 10 or the bottom 20%, that piece of it, those people are not in as good a shape as they were, you know, some years ago. But, you know, I think those are for non-economic reasons. I think they're for, you know, social reasons.
Or personal responsibility reasons, substance abuse and things.
But I think a lot of that has to do with government policy. I think that there are direct correlations between some of the actions of government and how those people find themselves.
I wouldn't argue with you for a minute. Okay. Larry, I want to thank you for being on as usual, and we're tackling some of the big issues.
It wasn't cheerful. It wasn't cheerful.
I know it wasn't cheerful. This is, well, it's not good news Friday. This is bad news Saturday. No, I'm kidding. I think, quite frankly, I've said this 2 or 3 times in the last couple of weeks. I have no objection to recessions. I have zero objection. I do not fear or worry about or concern myself about recessions, because recessions are house cleaning. You have to, once in a while, you have to take the incision. You know, you have to take the hard news in order to get to the next increase. It's just part.
I agree with that. I agree with that, but I think we have this is maybe a subject for another day, but I think we have a problem that we're not addressing, that we're ignoring it, and that we're trying to paper over it. And I think we're not actually taking the medicine and doing what we need to do. And I think that's a real problem.
Government spending or something?
I am. I am.
Yeah, well, we couldn't agree more on that. All right, Larry, again, thanks for being on this Saturday morning or Saturday night for you. And to all of you out there, it's been great talking to you.